So that turned out, and then he's been
buying everything here.
Yeah, he's selling Riverside. He sold Riverside to come here in Orange County, and then building ADUs in the back.
I was gonna say, how's he gonna make money buying stuff here? That's what he's doing.
Yeah, so he has money.
Production background.
He does actually. Yeah, and he's fine to lose because he's losing money for probably 6, 7, 8 months.
Yeah.
By having someone in the main house and then like getting plans approved, like all that stuff, that's gonna take a while. And then once you have to build it then. And then fill it. So it might actually be like 10 to 12 months before a tenant's in there. Yeah.
But then
so he'll
in the green.
Exactly. Oh yeah, far in the green. Well, this is a business opportunity. Is that so? Let's say it costs him like $5,500 a month to hold it. He could rent the main house for like $4 roughly.
Yeah.
So that's $1,500 a month. He's negative. He has a high interest rate. So then he goes and builds the ADU permitted. He adds, so let's say he bought the property for like $820,000, let's just say, and then he spends about $150,000 to $200,000 building the ADU. So that's let's say right around $1 million. He's in it roughly. So he's in it for $1 million. He rents out the main house for $4, but then that ADU he can rent it for like $22,000, $23,000 because he's going to build like a 2-1 in the back. Yeah. So $23,000. So what is that for? It's $6,300 a month right there. But this is the great thing. Within likely, this is the upside. We can't guarantee this, but most likely rates are. He has like a 7.5% because it's an investor loan. Yeah. Most likely within a year or two, he's going to be able to get
something in the 5s.
Exactly. Yeah. So, dude, now his holding costs go from 55 to what, 45? Mm-hmm. And he's made, and out of the end of this year, he's going to have 63, but then another next year's rent, he has 2 units to raise. Yeah. So that's where that's a big business opportunity for him is now that we're all hoping that rates come down. Yeah. But then you have equity play. You're adding, 800-900 square feet to the property that's permitted. So that now that value goes to what, 1.1, 1.15, or so. So anyways.
I mean, if you have a lot of units, you can make a lot of money like that because he's getting $2,000-$3,000 extra on each property. So that's not bad. Yeah. Especially if you're just selling one and getting out of that one that you had.
And it was not a good one, right? Yeah. So he kind of sold like a below average property, and now he's buying 3, in Orange County, that are going to appreciate higher rents, closer to home for him. So I'm really happy for him, but he has some money to play. He's not he owns a lot of properties, and he can afford if it goes wrong and when it goes wrong. There's going to be hiccups along the way. Sure. Maybe the city might take 10 months to get approval and then 5 months to build. That delays the plan, but he has the pockets to withstand that.
Are you guys targeting properties that have a detached garage in the back?
So one of them we bought, yes. It doesn't have to, but it's ideal because Anaheim I've heard through the grapevine that Anaheim will allow you to have a single family home, a garage conversion, so that's 2, and an ADU. So that's 3 permitted.
I showed a house like that earlier this year.
Yeah.
Or earlier last year.
Yeah. And so the only problem is you got to figure out parking. That's the thing. So I think if you take away the garage, you need cover. I think Anaheim is like this, where you need covered 2 additional spots. So that's like
taking up this whole street.
Right. So that's like 4, so you gotta, you have to have like the right lot size, or one of the homes that we bought has a very long driveway going all the way back to the backyard. Mm-hmm. That we can make work. But yeah, so that's what we're doing. One of them we bought, the one we just closed on a week ago, it did not have a detached garage. It was attached, but it had it's a big lot, super big lot. So we're going to build probably a 2-2 ADU back there, 2-bed, 2-bath. But it had the garage, and that was attached, and then it had a room that wasn't counted in the room. So it was like a sunroom, but nicer. Mm-hmm. So we're actually going to convert that instead of the garage. Oh. So that's still 3. So because then we can still have the garage and the driveway. And this one's on a nice, it's a nice cul-de-sac and stuff. So that's what these guys are doing. And I have more that they're doing that. They're just, they don't need to make $1,000, $2,000 a month on month 1. They see it more as appreciation and just, really keeping these forever.
So these guys are taking single-family properties and making them into duplexes and triplexes, essentially.
Exactly.
Okay. Now, for them, it makes more sense to do it this way than it does for them to just go buy a threeplex or a fourplex?
So I think we've been going back and forth on that, because so let's say in Anaheim, a fourplex is going to be a little bit more than that, like maybe 1.5, but they're going to either be 1.1s or there'll be 1.4 if they're 1.1s. They're going to be 1.5 to 1.65. Again, this is in Anaheim. If they're like 2.1s, So that being said, so there's that. And then, so with single family, what they are, the rents are a little bit similar. The rents on the fourplex are higher on month one because you have 4 units.
When you come in.
Exactly. When so the long-term play with the single family is, I think my clients, they like that the purchase price is almost half.
Yeah.
So that's one.
Yeah.
So they're starting off a little bit smaller. I think that I can just feel that their comfort level is more like that.
Yeah, instead of spending $2 million.
Right. And so they're like, okay, we'll spend, and they're cash heavy. So let's spend $800,000. I can get it, do a little bit, spend 10, 15 grand, cleaning it up, touch up paint, get it rented. So now I got some rent coming in. And both of these properties that I got them, they got a good deal. The first one I got them.
You're in that perfect window.
I was, and both of these, I hate to say this, but it's the truth. Most agents are not good. Most real estate agents are not good. And exactly. And I've been the last 6 months, I've been dealing with a lot of oh man, you should not be in real estate. You're going to get sued, And actually your client should sue you based on how but one that we just closed on, it was recently updated actually. It had the detached garage and the long driveway. And I was able to get my client $15K of a credit for no reason.
Yeah.
The property was fine.
Yeah.
We didn't even do a home inspection.
Nice.
And I just
Up front or afterwards, the $15K?
The $15K was after we went into escrow, obviously. Yeah. Come on, we're playing poker.
No, because I recently had one close where we asked for the 20 grand up front.
Oh, wow.
And they said no. And my client's like, okay, no worries. And they said they'll do 10. And we're like, okay,
wow.
10's not bad.
Up front before getting an offer accepted?
At the front, up negotiations for a rate buy down.
Oh, I see. Okay, so that's more reason, yeah.
Yeah, the house was in great condition. It's brand new construction.
Oh, wow.
It was clean. And then my client slept on it, and they came back and said, you know what, we'll do the 20. And took it. I'm like, you better take this and run.
Whoa. So the seller slept on it and said, we will do the 20?
We'll give him
Holy cow.
Credit. Yeah.
Dude, yeah. Okay. Deal. Yeah, well, and that's sometimes you're gonna have that, and that's not a bad. Both of the properties I was at, they had multiple offers. So my strategy changes when that happens. Now, if one is kind of specific and it's been on the market, I might ask for the 20 and then a week or two later ask for something else. Yeah. But both these, so my client got a really good deal on that first one, and then even a better deal on the second one. So I'm really happy with him there. He instantly had an equity appreciation on just by closing escrow. So he's happy there. But that's what these guys, I think they're just comfortable with starting a little bit smaller. And single family homes, I think he's thinking that I can force appreciation a little bit higher, and
if you got the construction background, it's a no-brainer.
Yeah.
Because you know what you're getting into.
Yeah.
Some people are going to be fearful of having to deal with permits in the city and everything else. But if he's familiar with that, it makes easy sense.
Yeah. So, and I have right now I have several clients that are they're in that range of wanting to continue doing that. Yeah, I think they just like it. It's a little bit more easier to step in, and I get that. I think I might one day might do that. Right.
Stabilize it and sell it.
No. Most of these guys, they're going to keep it for probably 20 years or even longer. So.
Would you do something like that?
I think I would. I think I would. I think right now would be an interesting time to do that, because think what your payment would be for 4 unit on 1.5, let's just say in Anaheim. What is that, 7-8 grand?
Yeah.
Maybe more with taxes, insurance.
But yeah.
And 2, 4, 6, 8, and honestly right there, you're not making money right there.
No.
You're probably, if you bought a fourplex and put 25-30% down, you're probably losing $2 grand a month on month 1.
You're lucky to break even, yeah.
Right, yeah, you would probably have to put 50% down to break even with rates and everything right now for investor loans. So that's the other thing I didn't talk about is it's hard to have upside there. You're highly rate dependent, versus if the single family route is, you are still losing money at the very beginning, but I can make up for it. I can think of it, I can only spend less than $200,000 to get another. So my client's spending $800,000, just for simple terms, $800,000 to make $4 grand. He spends another less than $200,000 to make another $2,300 a month.
Yeah.
Those are really good numbers right there. You know what I'm saying? Versus having to go buy another $800,000 to get $4 grand a month. So that makes sense. And then it's the added benefit would be to wait for rates to come down and then refinance. So I think you can actually break even and make money a little bit quicker if you did the buy a single family home, built the ADU. You just have to have a little bit of deep pockets, because you have to wait for the approvals, you have to build it, the construction, all of that kind of stuff. But like you had said, it's perfect for someone that construction background.
Have you been looking? Have you seen any that are just already done? What if they got the house and the unit in the back's already there?
That it's already permitted? Actually, no. No, I haven't. Well, and it could be because I'm not looking for that. Yeah. I'm looking to do that for my client, right? Yeah. So it could just be because I'm just not looking. But no, I haven't. Have you?
I know you've sold one in the past.
I have.
We see them come up, but
not that common, right? Yeah, interesting.
But they don't come up that often because they make money.
Right. Yeah.
I just saw one, like I said, last summer, and it was kind of like what you said. It was a house. It had a back casita. And it still had a detached garage that wasn't being converted.
Oh, interesting, yeah.
And it had a 2-car driveway. So that one would have been ideal.
Would you do it?
$900K.
Oh, those are good numbers.
Yeah, for that one, I liked it. My client didn't move on it. He's buying something else, but I liked it. It's funny because the house he's buying now has a detached garage, and it has a workshop in the back. He could do that, 100%. He's paying about $1 million. It's upgraded, it's got a sick backyard, but at the same time, he doesn't want to deal with like the renters. Some people just don't want to.
I do understand that. Okay. Yeah, but that's nice. I mean, resale value whenever he goes to resell it, or let's say he buys something. I would give him a call in a couple years and hey, there's a nicer house. Why don't you rent this one out? You can have 2. Yeah, that's what I would do. Yeah. Turn the workshop. I'll take 25% though. I'm joking. I'm joking. Okay. But you would.
Yeah, I would.
Okay, if the numbers made sense.
Yeah, I tried to find one that already had the process going for it. Cut down my holding cost time. If I could find something that already was
or like plans in place.
Kind of like this one we're buying in Santa Ana right now. It's got a house, it's got a garage, and it's got a workshop.
That's great.
The foundation's there for all 3 units to already have something going.
Yeah.
I mean, they even have an add-on in the back that if you really wanted to get crazy, you can make that another space that has plumbing. You can make that into 4 units on one property.
Dang, that's great.
So if I can find something like that that's already got the stuff going, that means, hey, I'm not going to be 12 months without.
Right, I know.
Pocket.
I don't think I could take that risk right now.
6 months to 9 months maybe, like within 1 year. Yeah, I'd do it.
Yeah,
I'd do it.
Yeah.
It's not a bad play at all. Especially you got to pivot when the market.
And that's what they're doing. They're like, hey, like we want to. Well, these clients are they're all business owners, and they want to. They know that investing today is different than 2 years ago, and they're more long term. I think that's what I respect about these clients I'm working with right now is they're long term. It's like, okay, yes, obviously, do I want to make money today? Yes, but what do I see that's going to happen in the real estate market 5-10 years from now? Like they're going to be very happy that they took this risk.
Yeah.
And again, they can afford it. I think if you're a first time investor, like you haven't bought a house before, you haven't bought a rental, I would not do this. This is for, they're all seasoned real estate investors and they can afford hiccups,
yeah.
you know?
If you don't have the stomach for it,
right,
or even the funds to hold you afloat, that can get
it can add up quickly.
Very uncomfortable. Heck yeah.
Yeah, you know, and like, what if you have an issue with one of the 10, you know, so there's a couple, you know, there's a couple things that could go wrong, you know, so I think it's perfect for a seasoned real estate investor, or I know some people that live in an area where they could build an ADU, you know, in the back, and it's like, hey, maybe you want to upgrade, or you know, if you don't use your backyard that often and you want to get into real estate investing, hey, building something in the back wouldn't be you know, that would be something that I would say, you know, look at. You know, if you have some funds to invest and you're okay to share the property kind of thing, I mean, I would do that.
I would do it.
I'm actually looking at doing that on my property right now.
I'd partner on a deal. Which, Texas?
Yes, actually, but mine here in Orange County. I've actually thought about building something above the garage.
Oh yeah.
And just like a midterm rentals.
Yeah.
You know, because where I live, I couldn't do short term, but I could. My lot size is kind of small, so that's why I could go above the garage. And just have a studio, or 1 bed 1 bath, and do, you know, traveling nurse or corporate lease that are 30 days or longer. Some of the traveling nurses, they'll do 3 months. So, dude, that you know. But I'm now thinking, you know, family wise, like, hey, can we swing that?
Yeah.
And I would say yeah.
I know you can swing it, big dog. I know you got it. Okay, so what do you think about the market right now, man?
That's a good question.
Inventory, pricing.
Why don't you go first? What do you think? I mean, I have an opinion, but I feel like I've talked a lot.
Okay, so that's fine. So obviously it's January. We just got over that holiday hangover. We're still kind of in it, to be honest. We're seeing days on market a little bit higher than it was last year, a little bit. But I think the market is still crazy hot. I think it's still a very strong market. I know a lot of buyers are starting to wake up and say, hey, I want to do something this year. I want to make something happen. I hear rates are coming down. So I think we're going to have a flood of buyers. I think we're going to get a little bit more inventory if rates come down. But I think it's going to be, it's crazy, man. I have some clients that bought 20 years ago, 15 years ago, what have you. Like, every time I talk to you, the market's hot.
Isn't that the truth?
It's kind of how it is, man. The market is still kind of hot. Inventory's not high right now. And it's being competitive. Now, I will say that the people are starting to focus more on those turnkey properties. I mean,
yeah, I would agree with that.
Yeah, I don't know why the ones that just need work, people are kind of just shying away from. That'd be good for your investors or something like that.
Maybe that's why we're scooping them up. Interesting, because I have seen that the ones that are just about turnkey, man, are they hot?
They're gone.
Yeah, they literally are.
15 offers, 5
Yep.
offers, what have you. But the ones that need some sweat equity, they're just sitting on the market a little longer. So I think that kind of gives the false image that the market is not as hot as it is. I think people see that and they're like, oh, this property's been on the market 100 days or 60 days, 90 days, and it's really just because of the condition.
Right.
And maybe it's a little overpriced. But lo and behold, if you had another property that's ready to go, it'd be gone so fast. Wow, this market is smoking hot. So I'm still seeing a hot market. If rates come down, it's going to get even hotter.
Dude.
That's what we're projecting. Hopefully inventory rises a little bit if rates come down, but it's been kind of still crazy here. I know other parts of the nation aren't having the same market.
Right.
California, I talked to people in Texas and Florida, and they're like, hey, market's kind of cool. There's some deals out there. I'm not seeing a ton of super killer deals here, unless you look for something that needs some work, like a fixer-upper.
Yeah, and even then it's almost, I don't want to say impossible, but it's very tough to, if you find something that needs work and you're a flipper, in most cases, there's not enough gap between what you're buying it for and then the ARV, what you can sell it for, for there to be like, a profit there. Now there are some cases, there are some cases where you find stuff off market, and I have seen that, but that's very rare. So, LP, I completely agree. I think what I'm starting to see small indicators of 2021.
I know.
Where just crazy offers. I just got countered to remove appraisal contingency. I haven't been countered to remove appraisal contingency since the beginning of 2022. I've had
I just removed all contingencies except inspection.
Dang, good job. That's cool. And all of my offers in 2021 and into 2022, we were at the start removing appraisal at the start. Now we're playing poker with that when we do that. So strategically is what we're doing. Inventory is still pretty low. We normally have 7,000 homes on the market. We're just over 2,200. Kind of bouncing back and forth there. So rates 3 months ago, we were at like 8.3 was the highest. And then we were in the low sevens, like 7.2. And then just about less than a month ago, rates came down into the high sixes. And then it went to like 6.6. Now we're kind of bouncing from mid to high sixes right now. And I think that's one of the reasons that it's hot right now is it's a new year. People are, hey, okay, let's just get back into the market, Now I wouldn't say it's absolutely crazy right now. I think that if rates get low sixes, I think it will, because there's a lot of people over the last 2 years, and even from COVID, that just haven't they've been on the sideline. And so I think sometimes there's okay, let's just bite the bullet and do it. But my take on the market is, we're very dependent on rates. If they go back up to 8, it might slowly cool down a little bit. We might not have 10 offers on homes. We might have 1 or 2. But even with 8% rates, homes are still selling and appreciating.
I got my opinions on this, but what are your thoughts about how this Southern California market is really hot, and it's not crazy like you said, right? We're not going $100,000 over asking price like we were during the pandemic.
That's right.
But what are your thoughts on this market being pretty hot compared to some other markets being pretty cool? That's a good question. Is that raising any concern for you?
No, I think that there are some markets that are different. I'm from out of state and from Washington State. Now, Washington State has changed over the last 18 years, but growing up, it was very slow. Appreciation. The market. We didn't have these surges. Now it's a little different today, and then coming here in California, I've been here for almost 20 years, and it's completely different. It's scaling quicker, faster. There's just more people here, more jobs here. We have a way larger economy. California by itself, if it was its own country, would be like the top 15 or actually less than 10 wealthiest country in the world. Just California. It's 38 million people that live here. But that number might change. Not to get on politics, but
Think they're leaving?
So, some have left, but I think it's California's still, we have great weather here. That's why I'm here.
Everyone talks about the people leaving, but they don't talk about the people coming.
Yeah, well, that's another conversation, because I don't want to say it here, but that's another conversation.
I cut it.
Yeah, no, I saw the one on video, Once we click it off, but these are good conversations, because people are still coming here, yes. I'm not going to say what we're going to say later, but I still think for the foreseeable future, jobs are still going to be here. It's still going to be there's still going to be 30 million people that live here. We have one of the best climates in the world, like period. It's 70 or 65 degrees and sunny in January, all of January. Like most of the world, it's not like that. During winter. So I just think that there are some markets that are different. and that's okay. And you know, you should just know that in every market, you're not going to have the same appreciation as California. You know, like Texas, we're both into Texas. You know, there are some benefits to Texas because they do have appreciation, but it's definitely more throttled down. But they're more calm and steady, and that has its place in the market for sure. You know,
I had the same opinion on that. I just wanted to hear someone else say it, right? Because so many people get caught up on that, like, oh, here the market's crashing over here in Virginia. Virginia's not California. They don't have the same economy, they don't have the same jobs, they don't have the same weather. It's completely different. So you have to know that when you're looking at the market and look at your local real estate market.
That's right.
And you can look at the national just to look at trends and see what's going on to get a feel for things.
Right.
But when you want to get really into it, you have to compare apples to apples, and California is its own market.
That's right. And even within California, that's why it's like, as you just said, market to market, like from Orange County to Riverside, those are two different, actually Riverside's ginormous as far as like this, all the way out to Palm Desert, right, and beyond. So that being said, you need to look at the local market, but California as a whole, it's just its own market.
There's a lot more price reductions and longer days on market in Riverside County than there is in Orange County.
Yeah, absolutely.
Bottom line, right?
Yeah.
That's because we're near the coast. There's more jobs.
That's right.
Schools. There's all these different things that
safer
are in Orange County. Safer. All these different things. So it's going to be different markets. People gotta.
And that's those are some of the reasons why one of my investors had sold out in Riverside and have been buying here in Orange County for some of those same reasons. And again, there is pros and cons with both sides. That's why I think it's like, if you're thinking of what to do, you know, look at all of the facts, you know, and all your options. Talk to a couple professionals, realtors, and then also I'd look on, you know, Bigger Pockets and other, like, you know, real estate investing platforms to, you know, to really form your opinion.
What are your tips for buyers here in Orange County, man? What would you say going into this market and they want to do something? Orange County, in my opinion, is one of the best kept secrets in the world, right? It's just one of the best places to live. I'm biased because I live here, but I've been around the world and I've seen other places, and they just don't compare to home. I mean, even LA County has some things I don't like. San Diego has some things I don't like. I just really, really love Orange County. What do you say for tips for people trying to do something in Orange County, because that's where we are?
Yeah, well, I love Orange County too. You know, when I first came to California, I was in LA County, but like as close to Orange County as you can get. And once I saw Orange County, I'm like, oh wow, this is much different than LA County. Much different. You know, nicer beaches. You know, they're better neighborhoods. Like, I've never seen some of these neighborhoods. You know, coming from where I came from, there's gates. I've never like gone through a gate before. You know, before coming to California, and it's like there's some communities like that are just like Pleasantville, like you know, like Ladera Rancho Mission Viejo. Like, there's more of those. I've never seen any of those before. But long story short, you know, it's going to be expensive. You know, period. It's probably going to be one of the most expensive places you can buy. Period.
But it's worth it.
Hell yeah.
People just see the price tag and they're like, I don't want to do it.
Right.
It's almost like a nice car, a nice boat, nice anything you want to buy.
Right.
It always feels super expensive.
That's right.
But you're paying for it because it's worth it.
Yeah. Yeah, and I think I'm kind of speaking to like the person that lives here, maybe he's renting but doesn't own. It's like, it's going to be expensive. It's going to require a lot of resources, you know, but if you're going to be here for a while, it's completely worth it, because over time prices go up, and also over time your rent goes up, man. You know, and it goes up quickly, you know, and you know, because as cost of living goes up, as costs for investors go up, they pass that along to unfortunately, I'm about to do this too. I have the world's best tenant in one of my properties here in Orange County. And I've actually really worked well. We've worked really well with each other. We've had a great landlord and tenant relationship. We're not like best friends or anything, but we're both trying to make it work for each other.
That's
like
important.
So there was several times where I didn't raise any rent during COVID, and I went above and beyond in some of the repairs I did, and there's a couple other things, and then he started doing some of the repairs himself, and like, hey, can you buy the materials? And so because I wasn't raising the rents and this or that. Long story short, now my HOA has been going up, my home insurance is going up and all this. Long story short, what I'm saying is costs for the landlord are going up too, and guess what? I have to now raise it at least $100 a month, and that doesn't go to my bottom line. That actually goes to the top line that pays for just for me to make the same amount of money, I have to charge $100 more per month. Now, for this situation, it's justifiable because he's probably $300 lower than market value on something that's on a $2,000 a month rent. So that's actually kind of significant. It's not like I'm charging $4,000 and he's $300 less. He's $2,000. I probably should be charging like $2,350 kind of thing. So long story short, it's going to be expensive, but it's worth it in the long run. If you have steady work, if you have you feel comfortable, you're going to stay here for a while, dude, buy a house. It's in my personal opinion, it's the best financial decision you can make if you can stomach the payment, and you might have to reprioritize your budget. I just bought a house a year and a half ago. I don't go out to eat as much as I did, man. Now, is it worth it? Yeah, dude, I got a house now, finally. And it's like, it's definitely costly.
Put that grill to work.
But exactly, put that Blackstone to work. Yeah. But it's like, okay, would I rather have a house or go out to eat? All the time, and not pay attention to what I'm spending on food. Like, I'd rather have a gosh dang house, So anyways.
That's good.
What about you? I know we're scrapped for time, but what about you? Like, what are your pointers, or I think you started with best kept secrets about buying in Orange County?
Honestly, like for first time buyers, it's gonna sound crazy, bro, but at the end of the day, you just gotta commit to it. You just gotta commit to it. For first time buyers, the biggest thing I see is the shyness, to hold back, to not get pre-approved, to not do the steps, to get scared of the payment even when they have the money and they know they can make it. You just gotta commit to doing it and say, you know what, this is worth it and it's for a bigger cause and I'm gonna make it work. If you can do that and commit to it, you're gonna be in good shape.
Heck yeah.
I really think that's it. I think a lot of people, it's just a lack of commitment that I see.
I agree.
Anything else you wanna cover? Investments? Market, economy?
The economy is unbelievable. I think that be ready. I think we can maybe close at this. 2024, I think it's going to be a great year. But I say be ready for some hurdles. That's what I would say. Be ready for some hurdles. And what my wife and I are doing is, as business is starting to kind of come back, and as we've significantly cut a good amount of expenses over the last 18 months, and also our budget has changed with buying a house too. But as this might be for like small business owners and more realtors, but as stuff comes back, save that money, man, and that's because I think that it's going to be good in some cases, but we don't know what the next year holds and the year after that. And so, stay lean and mean and invest into what's, what's solid and what's lasting. And that's, that's real estate, that's something that you can, that's tangible. And as you would say, it's like the American dream, buying a piece of America, right? So, but I think it's going to be a great year. Stock market might be a little bit even more kind of sporadic, but
there's a lot of things going on. You got
election,
wars going on.
We got wars, we got rates, we got stocks. Right.
A lot of weird stuff happening. I think it's going to be a pretty good year. I think it's going to be strong because we have the election. I mean, the war.
I think that's why rates are starting to.
The war could really impact that. I mean,
it will.
Talking about it a lot, but.
Right.
Basically, in two different wars right now.
The forever wars. We're always in wars.
So
that's interesting to think about.
But I think it's still a good time to buy real estate.
Well, absolutely. As all the other stuff, because what has, and this is what we obviously we can talk about real estate 24, all day. I can, and I love it. But with the pandemic, with stock market going down 38% within 2 weeks. 2 weeks, the whole stock market, S&P 500 went down 38%.
Never dropped that fast.
What has real estate done, man? Like, think of what real estate, the cost of something in 2020 and then 2023, right? 2024, actually, right now.
Yeah,
you know what I'm saying? It's like, I remember at the very, like, right before COVID and during COVID, I was showing like $1.2 million homes in South Orange County. I'm like, oh, dude, this is like a big house. Like, this is expensive. Dude, now 1.2, it's like, and then, don't get me wrong, 1.2 is great. I want to sell those all day.
Yeah.
But it's like, that's like, okay, like, you know, got it. Okay, cool. You know, like, it's not like, oh, dude, like, you know, let's go to Vegas, right? Right, exactly. The new 1.2 is 2 million.
Yeah.
Literally, you know, so, you know, that should just show you that real estate in great areas like Southern California and Orange County, it goes up over time. You know, we can't control every 12 months, but we can control, you know, 5-7 years, you know, that's going up.